Welcome to Chasing Financial Freedom. This is Justin Hodges, and with three simple things, you can minimize the taxes you pay. Those are going to be buy, borrow, and die. So, as bleak as that may sound, this is tax planning at its finest. So, the notion is that you buy appreciating assets, you borrow against them, which is not taxable, obviously. There's interest on a debt essentially there too. And then you die because of a stepped up basis and written into the tax code. You can have your beneficiaries inherit that and pay no tax essentially on what it grew over your lifetime. So I'll dive a little bit deeper here. So back to number one, buy. What are you buying? You're not buying crap. You're buying assets that appreciate in time. Those really, in the basic sense, are going to be real estate, and that's going to be stock market essentially. So individual stocks, ETFs, and so on. Anything else you buy is kind of speculative, honestly. So buy things that appreciate in value. Number two, borrow. Now, when you go to borrow against your assets, there's no tax on that because the government doesn't tax essentially, debt, if you will. They tax income, capital gains, and so on. So by borrowing instead of selling off your positions, you're paying a lower percentage because the debt interest is lower than taxes, at least currently in today's world and bracket. The third component of this is you die. So again, as bleak as that sounds, you get a stepped-up basis that's written in the tax code when it comes to real estate and then appreciated assets in your brokerage account specifically. Not really talking so much IRA, Roth, 401k, or employer plans here, where it's really a brokerage account. Anything that's subject to capital gains, either long or short term, those account types. So again, passing away, you get a stepped up basis. So from the day I bought it, let's say today, and it's grown over 30, 40, 50 years of my lifetime, I've never sold anything, obviously. It's worth a lot more probably in the future. I pass away, my beneficiary inherits that at that future basis, meaning all that in-between growth is not taxed at all. The beneficiary can then sell if they'd like to, pay no tax on all that growth in these specific account types, or they can continue the process here. That, my friends, is how the rich minimize taxes through proper tax planning, and the strategy is called buy, borrow, die. My name is Justin Hodges. This is Chasing Financial Freedom.